Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, our forecast from last week's weekly market report were 100% accurate. And as you can see from the 1-year daily candle chart of the Qs, which is basically the ETF that represents the NASDAQ market, I've left my lines from last week's report so you can see how accurate the forecasts were. And for those who are joining us for the very first time and watching this report, let me put you at ease and let you know that the candle charts have been around for a couple of hundred years. The Japanese rice traders really created them to forecast rice crops, and they display quite a bit of information. Not only in each candle do we have 4 data points, but when you add the volume and some of the other indicators that have been added to the candle charts over the years, it's become an incredible tool for forecasting the market, and I'm going to show you the evidence right now. Now, that line right there, that diagonal line, is what I drew last Friday. And remember, there was no price action there when I drew that line. For those who followed the report from last week, you can see that the end of the line is my target for this week. And I said that the NASDAQ market would go up this week, and that's exactly what happened. It followed it like a charm. Now, the other thing I'd like to point out is in the volume bars down here. Do you see where the volume is dropping day after day right here? Well, that is actually telling us that the buyers are moving away from their buy idea. They're losing their momentum. And when the buyers lose their momentum, the sellers recognize this and they start their selling activity. So what that means for next week is that there's a good chance the market will drop. In addition to the volume being a leading indicator, you can see here this blue line is the %K on the stochastics oscillator. Every time the market has gotten into this overbought area and then started turning down, the market followed in that downward trend. So you could see that the stochastics oscillator had moved up. It's in an overbought condition by definition. Anything over 80% on this scale to the right is considered overbought. But you can see that that blue line is starting to move sideways from an upward trending move. And my forecast for the stochastics is that it's going to start moving lower. Stochastics is a great tool for measuring momentum. And what this is telling us is that the upward momentum is starting to slow down. So my forecast for the NASDAQ market is going to be opposite from what I said last week. So I think the market is going to move lower next week. And this diagonal line that I've just drawn is my forecast, with the end of the line right there being at 154.48. That is going to be my target for next week at the close of the market on Friday. So keep an eye on that so you can see again how accurate that forecast is. Now, if I look at the diamonds, this is the Dow Jones Industrial Average ETF. You'll see, again, my forecast was spot on. I said that we would move up to this level of resistance right here. I drew this horizontal line as a target area, and then I said we would start to move lower from there. And you can see that today's close was within pennies of my horizontal line right there. So that is, again, another 100% accurate forecast. And like the NASDAQ, we see the volume dropping. You see, so the buyers are losing some of that momentum. Stochastic is in an overbought condition. And you see this little red hash mark right there? That was my forecast for the stochastics. Not only did I forecast the Dow moving higher, but I said the stochastics oscillator would most likely move higher as well. So I'm going to erase that, and I'm going to draw another forecast for the Dow, and I'm even going to forecast the stochastics oscillator. I think the Dow is going to start to pull back just like that and even drop below that 20-period moving average. The stochastic will most likely pull back as well. And once this blue line crosses the red line, that will be a sell signal for the short-term traders to get out of any long positions. So keep an eye on that oscillator as well. Now let's move over to the spiders. That's ticker symbol SPY. This is the S&P 500 ETF. And as you can see from my forecast last week, I just simply extended my forecast from the previous week. So I added on to that upward trend. And look at that. We closed within pennies of the end of that line, which was my target. And next week, I think the spiders are going to drop for a couple of reasons. Number one, if you look, we have 1, 2, 3, 4, 5, 6 green candles in a row. That's called a stale green light. We're long overdue for a red candle right there, and the volume is dropping as well. So what we're seeing is a drop in the volume, a steady drop in volume in all the major indices. The stochastics, once again, is in an overbought condition, and one thing I want to point out is if you look at the reading on that, that is currently 97.90. That's the highest reading that we've had in the previous 12 months. So that is extremely overbought. And what I'm forecasting here is that the percent K line, that blue line, is going to start to drop, cross over the red, and then we will see a sell signal there as well. So keep your eyes on the S&P. You know, the leading indicator that I talk about most often is the volatility index. That's ticker symbol VIX. And we talked about the stale green light. Let's look at the VIX. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 red candles in a row. I think that's a record for the past 3 years. There has not been that many red candles in a row. And I had my forecast that the VIX would drop. Now remember, the VIX is a contrarian indicator to the S&P. So if the VIX is forecasted to drop, the S&P will most likely rally. Now that we've hit my target, which was this support level right here, I'm going to erase all lines. You see this little mark right there? I said that we would start to bounce. Well, that's what I think we're going to see for next week. We're going to see the VIX, and I'm going to put a 99.9% chance that the VIX is going to rally just like that. And being that this is a contrarian indicator, that means that there's a 99.9% chance that the S&P is going to drop next week. Now, I've had a couple of people in the past challenge me on that percentage of accuracy, but I'll tell you, these charts are that accurate. If you've never used candle charts as a forecasting tool, then now is the best time to start learning. There's a couple of reasons why I think the VIX will rally, not just because of that stale red light, but we have a wide divergence from that 20-period moving average. And you'll notice in the past, whenever the VIX has moved that far below, it has generally snapped back to the moving average. By measuring the divergence at this current point right here, you'll see that is the widest divergence that we've had in the past 12 months. So again, that adds to the probability of the VIX rallying and the S&P moving lower. In addition to that, the stochastics oscillator is at a record low for the year, and I'm forecasting that will start to turn higher. Once the blue line crosses the red line, the K crosses the D, there's a buy signal for the VIX, which again is bearish for the S&P, and I'm going to leave that right there in place so you can track my forecast next Friday. Finally, if you look at the Russell 2000, this is the more broad-based index in the RUT, and as I zoom in, you'll see that the prices moved up exactly as I said they would, with my target hitting this horizontal line. I drew that target level as a role reversal resistance. It kind of blew through that, but you'll notice that these candles are now very small bodied candles. Those are known as spinning tops. The stochastics oscillator is expected to turn just like the rest of the markets. And with that, I'm going to erase all of these lines right here, and I'm going to draw my new forecast for the Russell 2000, which is going to be a pullback to the 20-period moving average. Let me redraw that because I just erased it. That's going to be my forecast for the stochastics and for the Russell 2000. I hope you're enjoying these reports because they're very accurate. We are currently tracking the highest percentage of accuracy in the world. There is no one at this point who stepped forward to present a stronger percentage of accuracy. Right now, we're tracking almost a 90% accuracy on our weekly market reports. On our trade alerts, we're tracking over 80%. Actually, it's 83.4% in the ongoing percentage of accuracy for our trade alerts. So if you're interested in learning more about the Market Guys, just go to the Market Guys website. And a week from this coming Monday, we have an open house Q&A. You'll see in this bold red type down here, you'll see that we have an open house Q&A right there in the bold red type. Open house Q&A is going to be a week from this coming Monday on the 21st of January at 8 p.m. Hope we'll see you there. Just, again, register, save your seat, and we will take it from there. So have a good rest of the week, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.